Good evening. Welcome to Options Center. It's Tuesday after the bell, 1/24/23, Microsoft Day. Welcome, everybody. If you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. And make sure you hit those like buttons. It's been amazing, the growth that's started to happen in this channel, and I'm really grateful. And therefore, I will keep pumping out as much information the best I can and as often as I can. And it's really been just wonderful on Twitter, where I post all of my charts, and on The Option Guys, where we post trade ideas and things like that. So all that's in the description. Check it out. But today we're going to go through ES on multiple time frames as usual for our market update. And then we'll check out Microsoft and maybe a little bit of the, how about bonds? I think bonds and the VIX, they're trying to tell us something. So here we go. ES on the monthly time frame. We have consolidation area, rejecting off it, rejecting off it, rejecting off it. We just keep trying to build a base and get into that area and re-enter into this consolidation area. There's two choices. It's binary. We get in there or we reject. We're looking at that. We're at a midpoint just about everywhere. It's kind of a neutral stance, waiting for something to happen. But I remain bearish as we are setting lower lows and lower highs, lower low, lower high, lower low, lower high. We are right on that 8 EMA, and it's going sideways. So that's not much of a trend. We are in a sideways consolidation. So we can't, there's nothing that tells us. Now let's go down to the weekly. On this weekly time frame, we had that ascending triangle, broke down from it, lower high, lower low, hit the bottom of this channel, also coincided with the 200 simple week moving average. Now, after we've seen this large move, we can consider this first move a 1, 2, 3, 4, 5, and therefore it's complete. And then we're balancing out. That's our main way of looking at this. And then we're triangulating in time to consolidate before a continuation move. Now, this doesn't have to be. The alternate scenario for us is that this full range move here was perhaps an ABC, and that's completed. And now we get an A, something with a B, maybe a triangle until FOMC, and then a C move to balance out this much larger move. That's what we're trying to decipher right now, and I think that's a good alternate to keep in mind. Now, some are saying, hey, we're breaking out from this downtrend line. That may be so, but if we're looking at this as being a triangle, then you'll see on the other charts that we're still contained within that triangle. Okay, moving down to the daily. That's not the daily. Daily trend is our friend, but I got to get on the right chart here. All right, here we go. And this downtrend line that I drew more coincided with these 2 points here. Those 2 points, so it doesn't quite touch this one, and then that is stopping this for the time being. But we have an alternate trend line here where you see it holds price nice and neat, and a triangle here where we have a lot more room actually to fill if that were the case. That's only on ES though. On SPY and SPX, it's a little bit different. That's why we look at all of them. Again, we're in lower highs, lower lows. And in the near term on the daily, we're just in a sideways trend. We're oscillating around this point of control. It's a volume shelf. We got on top of that, made a higher low in the daily time frame. And so I can see where the bulls are coming from. This thing could continue to rip higher. Microsoft isn't quite doing it. We didn't have the conference call yet, so we'll see what happens with that overnight trade. And if that can't hold, then I think we start really potentially ripping to the downside. But we have to be cautious that this might just fill out a little bit more till February 1st, FOMC. Okay, on this, let's go over to the SPX. SPX, this is the point of view that I was telling you about. And by the way, I don't want you to forget, this is still the next target area that I think we are going to arrive. Okay, it may be, we did this whole sideways consolidation. You see, you come from one side of the channel to the other side of the channel in either a sharp move from top to bottom, a sharp move from bottom to top, or simply a consolidation until you get back to it sideways. Okay, they all do it. All those fit the scenario. Now, if we start breaking down from here, I do think we get into our area. And as a matter of fact, there's my primary scenario is that we break the channel to the downside. So we'll keep an eye on that. You can't predict. You just have to watch price action and go from there step by step. But I just want to show you a little bit closer view of this triangle. Notice that it's breaking the downtrend line, but if this is a triangle, I mean, you connect the tops of each. Top of there works perfectly with that. Bottom all the way here, perfect touches, and we're contained still. Okay, so something just to take note of, and we're going to continue to fill out that triangle until we break down from it or break up. All right, let's glance over at NQ. Oh, before we do that, I just want to show you the McClellan oscillator. Yeah, we mentioned that price was overbought. We're overbought conditions, came down to retest, and we're just kind of remaining up above here until the oscillator breaks below 100 in very similar situations. Here, all of the all of the bear market starting from 2022, every time you got above, the price, the actual price started going down when we broke down from the 100 area. So you had a peak right here, then you had divergence, but once it crossed, it said see you later. Okay, same thing. Price just kept going up, oscillating there until we finally broke down from it. So what this is saying is that there are many stocks that are just they're really strong at this time, holding up the market. We're in overbought conditions, but that's just a strength. And as soon as we break down from that 100, that should let go of the market. Okay. Now, unless things changed and we continue to oscillate to the upside, as if it's a brand new bull market, or we're making brand new highs. I know there's scenarios out there, you guys. I know about the ending diagonals, that this is a wave 4 or a brand new wave 1, and we're in wave 2, and then we start to break all-time highs. I get it. I know that's out there, but we're in a downtrend right now, and we have to respect that, and I'll continue to do so unless the environment changes. Now, if you look at the MACD, we're oscillating. Nothing's changed. There's no breakouts. Same thing. Nothing's changed. No breakouts in the RSI as well. Okay, let's go over to the NASDAQ. Let's see if we notice anything different on here. Trend is our friend. NASDAQ's contained. Same thing. We even had a sort of benefit of the doubt. We had we attached the triangle to see if this was a triangle, and so we had the high here, got above that, and it's holding it right now. But if you did the trend line properly above, it's going along with the 200-day moving average, and we're still below that. And we have somewhat of a spinning top, or I guess hammer, I guess any of those that fit there. So it's a potential reversal candle. Didn't work out here, didn't work out here. So you need follow through for it to be the pattern. It's not an evening star. I'm trying to think of the word, but we just had it the other day. So anyway, not that important. So we see follow through to the downside or follow through to the upside. That will continue our trend. RTY. Okay, RTY's in the same predicament. We have a triangle. It's more of a descending triangle in my point of view. And we're at resistance, and we're still underneath the triangle top. The Dow, same thing. We had that large move, and then we are balancing. Yes, it's expanding wedge, and now we're forming a triangle above here. From this point of view, sure, maybe this is an A, B, and we still have another move to the upside. That fits the scenario that we're talking about with the SPX, but it can also break down from here. This could be a flat pattern that we have after we had our large move. We had an ABC flat pattern, and this could be a 1-2, 1-2 setup. Things to think about, and this whole flat could have been a larger degree wave 2 as well. A couple other things. What we're going to do, the VIX. All right, now let's face it, the VIX is at support. All right, unless we're going to break down into a whole new realm and going to a bull market, this is big time support. We start oscillating down here, and that's a time to be bullish because price action should be heading to the upside for the markets. But right now, we're in this triangulation. We hit the bottom of the triangle. We have divergence. We're forming a bullish wedge. We're at support. I don't know a better setup for anything than this. And it's possible to break down. Anything's possible. But that's what it's showing us. It's showing us that this is it's about to make a trend change. It's huge potential. Probability has it. Okay, VVIX. VVIX, nice little doji, nice little hammer candle for a possible reversal here. And that's the volatility index. So we're looking at, large traders, professionals, hedging the volatility. SKEW. I show all these on Twitter, you guys. If you want to see all of these, get on Option Center, Twitter. D Turner 555 is the handle. Again, SKEW has just come a long way from 111 up to 121. It keeps creeping higher. I have a downtrend. I don't know if you can actually, use technicals on this, but it looks like price wants to go higher. If this is a falling wedge, if that's the case. Anything else? Bonds. We're looking at bonds. Bonds are creeping up today. A couple ways to look at it. You have the downtrend. It's peaking above there. It's also making somewhat of a bear flag. So either way, a large move in the bonds is going to be bad for somebody. Okay, with bonds heading to the upside and breaking out, considering this as a bottom, that's going to be bad for financials. That's going to drop the interest rates. Financials aren't going to like that. And the opposite, if it breaks down and wants to make a new low from this bear flag, then that's bad for tech with rates going screaming higher. So any large move, when bonds are steady and just pretty settled without much volatility, that's good for the market. Nothing to fear. But when bonds are moving, it's going to take somebody down with it. Okay. Again, we're watching Dixie. It's trending to the downside, but it's getting tight in there. It wants to move, probably waiting for FOMC, but we'll keep an eye on that bad boy. And I think that should do it. I'm not going to bore you anymore. Don't want to make this too long. We're at 14 minutes. Thanks for joining us. I appreciate all of your support. Don't forget to like the videos, and we'll talk to you soon. Also, I'm starting to put a morning market prep on Twitter, a short little 1-minute video to show you what I'm looking at for the day to start. So thanks for joining us here at Option Center. Have a wonderful day. We'll talk to you tomorrow.